What's going on, guys? We're back with another weekly analysis review. So let's just get right into it. Essentially, guys, if you don't know, I'll recap just real quick. Every Sunday, we do the Sunday Market Blitz, where Angelo and I present to you our analysis based on the pairs that we normally analyze, and we'll pretty much showcase the potential for the week ahead. And then we'll show you a bullish scenario and a bearish scenario and talk through it. And then at the end of the week, I'll review it, pretty much see how we did. We'll mark the accuracy. We'll see which trade paths played out, and then talk through it some more. So this is a good opportunity to kind of get some value, just see how we're looking at the markets, and yeah, let's get right into it. So last week, April 3rd, DXY. Let's kick it off with this. This is how I'll normally do the Sunday Market Blitz. We like to look at DXY because it's 80% of all trade. It's considered a reserve currency. So when this moves, a lot of the market will move with it. So it's always good to kind of analyze this, see what the overall trend is. And when we did analyze this last week, we saw that we were still trapped within this range, but overall on the higher time frames, we're still very much bullish, right? Price action's been moving upward pretty well, good bullish volume, and then we broke key resistance here and then started ranging. Okay, so definitely strong characteristics on the higher time frames of a bullish trend. Okay, and that's where we are now here on the 4-hour. We saw that we're ranging between resistance at 99.25 and then 97.85 as support. So the most likely scenario here was that price action was going to rally into resistance again before we saw any sort of reaction. Okay, and then for us to consider this completely bearish, we would need to see a 4-hour transition, which means 4-hour high or low is broken with a lower high below. And then and only then we could consider the dollar bearish on this time frame. So let's see how it played out. And it did exactly as we thought. It moved right into resistance and then broke it. So we didn't get a reaction. Instead, it rallied through, and now it's currently resting at the 100 level. Now, be aware, the dollar's overvalued, obviously. It's been rocketing to the upside just based on economic events, and we know for a fact that this 100 area has had tons of resistance in the past, right? It's acted as a major level, hence also how big it is, So be aware at this level. I'm expecting definite reactions, maybe even some consolidation between 100 and 99.25 for the week ahead. But I'll have more on this on Sunday. I'm going to do a full analysis again, pretty much start fresh, and then come up with 2 new scenarios. So that's DXY. Pretty crazy. It exceeded our expectations, but definitely went with trade path 1. So let's move over to AU here. And this one was interesting too. Very bullish as well. We saw a major zone right here, 0.74 break. Price action moved through it pretty well, good volume there, and then started giving us a rectangle pattern. So this is just consolidation, right? There's no trend present from this point over here, 23rd of March, until April 3rd, right? There was no trend present. Price action was moving sideways. So we really needed to see either price action break above and go for the continuation, or come back and give us structure, which is more ideal, right? That's what we wanted to see. That would be a higher probability trade. It would just present a better setup overall. And this would be it right here, this exact trade path, the blue one. So a pullback to a structure point, 38.2, confirm that higher low on the 4-hour time frame, and then follow through with good continuation candlesticks, bullish candlesticks that we could then enter on. So let's see how this played out. Oh, and then also if we broke 0.74 and started seeing structure before, we would then reanalyze and start considering short scenarios potentially. So let's see how this played out. Okay, so this actually continued to rally. Rectangle pattern is a continuation pattern. So that was nice to see. It broke out, shot to the upside, hit resistance at 0.76. And this happened very quick. This is a pretty high volume evening star, right? Nice volume on that. Doji immediately, followed by a rejection candle, and then a huge bearish candle. So that was a very swift rejection. And now price action's pulling back to 0.74, our structure point right at 38.2% fib level. So this is where we're going to be looking for entries. Hopefully, ideally, price action continues to fall a little bit, loses its volume, kind of consolidates, and then we'll see that trend change happen when those the bullish volume steps in again, and then we'll have opportunities to go long. So this one's still pretty much forming, but this week is looking pretty good, the way that this has played out so far. I'm liking this. So yeah, I'll have a new analysis on this on Sunday. And yeah, it's looking good. Feeling pretty good about AU for next week. Let's jump over to AJ. This one was a little tricky. I actually had to analyze this on the daily time frame because of the volume recently. I mean, I can highlight this again, obviously. I've been doing this every week here. Now, if you just measured this one rally, this one push to the upside, we moved pretty much almost 1,200 pips, so 1,150. That's insane. 14% appreciation on the pair itself. Super overextended. Not much you can do with that. There's a complete lack of structure, so we're not going to look to buy it, really. That just doesn't make sense. You're leaving yourself like the risk wide open. This thing could tank to a structure point and then drop, 300-400 pips, and then your long scenario up here is toast. And you should have known to just wait for structure and then just be patient. When you see that type of volume, it kind of forces you out time frames because it's a higher time frame move, and then we have to start considering higher time frame zones, fib levels, structure, and so on. So that's the point that we're at here with AJ. We just needed to come back. Ideally, 61.8 was a really good level that I had in mind. 88 support. It seemed like that was a good amount of a pullback that we could then see structure and then gain confidence about buying this, right? Now, it's so far away from a bearish scenario, I didn't even mark one up. I think it's going to take a little while. I thought it was going to take a little while for it to even get down here, so let's see how it played out. Okay, not much happened. It continued to rally, pushed up to our 0% again, touching there, probably looking like a double top on the 4-hour, but we're still waiting for a pullback. So there's not much we can do with this yet. I will reanalyze this. Maybe we'll have another 4-hour analysis to show you guys tomorrow, but right now, there's just nothing there. So we'll get back to that one. Past week really didn't show too much, just kept pushing higher. Let's move to UJ. So UJ actually was setting up pretty nice. I mean, this was super bullish for a while, and I was hesitant on this for the last couple weeks because of this rally here. Very, very steep, right? And then the volume even increased up here for the last push. We hit our 0% right at 125. Very nice level, psychological level, where we saw rejection. Price action came down, kind of gave us, the hint of a head and shoulders, but this was also a key structure point. So how it reacted here really determined, where we were going to go. And we saw that it pushed up a little bit. We broke this minor lower high. So we were looking for a bit of a retest and then a continuation to the upside. That's really textbook after structure. You get a nice little test of structure formation, you get that higher low, and then you get a minor lower time frame transition, which is this exactly right here. So that was the idea last week. It was very likely that we were going to go bullish here on UJ. Now, if we broke the neckline of this head and shoulders, right, or 121.25, we're looking for simply a lower high below, and that would kind of give us more confidence in looking towards lower support levels for shorts. But we still need to see that break. So very far from that happening. That was just the secondary trade path. But let's see how it actually played out this week. So literally perfect. I covered this with the guys midweek on a few of the training calls, and we scoped this out. I know a few of them got in on this, but this was textbook. I mean, it did consolidate for a little bit longer than I would have liked, but there's a nice opportunity right there. Nice little morning star, just testing off this broken level, and then following through with the momentum, pretty much straight to our TP. Didn't quite hit it yet, but most likely will this week. Either way, let's see how many pips this was roughly. Just about 200 to the point now, 190. But up to our TP, it's going to take us 267-ish. But yeah, not a bad trade. Really nice out of UJ. Finally was showing us something clear, right? It was pretty easy to spot this one. And congrats to all those who did, all the members that were in on those calls and the small group webinars where we saw this kind of form up. So that was a really good opportunity. Let's move over to EJ. And this one was a good opportunity too. But let's talk through it. So EJ was in a really nice bullish channel for a while, making good ground here, breaking through key resistance levels, 133, really clean structure, right? Higher high, higher low at that support level, breaking above to a new higher high, retesting the broken, and just continuing very, very clear. So this was a great buy opportunity pretty much through that whole channel up to 137. We actually did mark this. If you go back a few analyses, you'll see that. And this rallied perfectly to 137 where we then expected reactions, which is what we saw. But then we started consolidating. So this right here, 137 as resistance, and then 135.4 as support. This was an area of consolidation, which strongly suggested that we were going to, attempt to pull back a little bit, that this channel here had essentially run its course, ran out of steam, and now we're going to start looking to the downside. So that's really what the idea was. This was a nice break and retest here. Not super clear, as you know, you want to see a lower high usually below a level that was broken, not kind of dancing around it. So it kind of brought down, you know, our ranking for this trade, if you will. So it wasn't like a 10 out of 10 trade, more or less like a 6 out of 10 at this point. So I was waiting for something a little more clear here. But let's a little more clear here for us to get a lower high below and then see entries. So I recommended on Sunday at this point to be a little patient, wait for something, again, really clear, and then enter on that. So that was the short scenario, definitely the first trade path. To continue long, I needed to see a nice break above 137 because we saw a lot of struggle over here. So for us to get above that and get a higher low, a good structure point, that would be all we would need to continue buying this. But because of how price action was forming, wasn't really giving us too much confidence. So let's see how the week actually played out and take it from there. So this was a nice retest here. This was the real entry. Nice engulfing as well. That would have been a great trade entry right there. We would have went into a little bit of profit, but then we would have seen that price action just continue consolidating. Unfortunately, you would have had to exit on one of these engulfings down here for a little bit of profit. But that's trading. You know, sometimes it doesn't always play out 100%. You got to know how to manage it. And, you know, if you did enter this, it did have the right confirmations. You know, you didn't do anything wrong. You just had to manage it properly, and you would have had a decent amount of profit. You know, nothing too crazy, but it would have been a winner at the end of the day, and that's what matters, right? You're not going to go broke taking profits like this. So let's say you clipped the trade there. It pulled back. Now we're consolidating. This zone is still in play. We're looking for strong rejections off resistance, and then if it breaks above, of course, you know, we're looking for, you know, higher lows, and then maybe continuations to the upside again. So this will be an interesting analysis for this week. You know, of course, I'm going to redo it for you guys, break it down all again, give you guys 2 new trade scenarios. But yeah, there's definitely going to be something to show you guys for this week. So let's move over to the last asset, actually, which is going to be gold, and let's talk through it. So we've actually been trapped in this range for a little while here, and that's what we were seeing last Sunday. Price action's dancing around 1930. We have key resistance right here at 1948, key support of the range around 1918, and then you can see all these fake outs, guys, right? Like all these huge exaggerated wicks, right? Fake out there, failed lower high, fake out here because, you know, failed lower high, fake out to the upside, failed higher low. So it's been really reacting pretty dramatically. There's a lot of volume coming into the market. We saw a lot of fake outs, obviously, so we had to be patient, right? And then what does patience look like? We want to see, in order to continue long, which the higher time frames, you know, are all bullish for the most part, we want to see an actual higher low confirmed with good follow through candles above the range. So not this. If we had one more blue candle here that kind of closed up in this area, that would have been confirmation enough. You know, nice bullish variation, 3 strong candles in a row. Why wouldn't you take that trade after a break and retest, right? It's literally 10 out of 10. But that failed here, so that's what we want to see now, right? That follow-through, that confirmation, nice bullish candles to enter long on above the range. So that's ideally what we were looking for. And then for us to consider this bearish, we need to see the opposite, a lower high below the range. And then we would be targeting towards like 1870 area, lower support levels. So let's click the button, play it forward. And we're still ranging, right? Look, we touched these levels 1, 2, 3 more times. Actually, a bunch more in there. And now up here again, 5 more times. So we're still ranging. Even more strict consolidation now, actually. So the volume's dropped off a little bit. If you just look at the size of the candles, you know, that can sometimes be an indication as well. But yeah, less volume now. But these 2 trade paths are still in play. So this analysis for Sunday is going to be pretty similar on gold. You know, the range is in play. We're looking for higher lows above, lower highs below. And that's pretty much how you play every range. You know, if it continues to move sideways and hasn't broken yet, then your original trade ideas are still very much in play, right? We need structure. We need a trend to present itself to then get in on it. And we just haven't seen that here on gold yet. So, you know, it's probably going to look pretty similar. But, you know, I'll reanalyze it. I'll mark all these up, guys, this Sunday and give you guys, you know, a new rundown for the week ahead. But overall, we had some pretty good setups, right? Not bad at all. I mean, AJ stinks. AU setting up pretty nicely. DXY followed through, and then some. We got UJ, who is it's pretty much mid-trade right now. Probably going to keep pushing to the upside to our TP for this week. EJ fell back into consolidation after a trade executed, and we would have had to clip it. So now it's going to be more of a range trade again for this week. And then gold here is a higher volume range trade. So not bad. Not bad. But yeah, guys, that's another weekly review. And I'll see you guys on the Sunday Market Blitz. Peace.